What happens when one of Britain's most historic supermarket chains decides to close over 100 of its own doors? Is it a strategic move for survival, or the first real sign of a massive retail-shaking crisis? This week, Morrisons, a grocery staple for millions, confirmed the closure of 103 outlets and services. And it's not the main supermarkets that are vanishing. It's the iconic cafes, the community pharmacies, and the ambitious market kitchens. The question is, why is a grocery giant hitting the self-destruct button on its own services? For those unfamiliar, Morrisons is the UK's fifth largest supermarket, a pillar of the British high street known for its unique Market Street concept. It's been a UK institution since 1899, but the last few years have been turbulent, defined by a massive private equity takeover and relentless competition. This new closure announcement is the clearest sign, yet of a desperate fight for efficiency. The company is shutting down a total of 103 individual outlets and apartments by the end of 2025, a sweeping restructuring effort designed to cut costs and renew and reinvigorate the brand. When the news broke that Morrisons was closing 103 stores, the immediate panic was that entire supermarket buildings were disappearing. That, thankfully, is largely not the case. The core closures are concentrated on the in-store services that, according to the new CEO, Rami Beatty, are simply uneconomic. The total figure breaks down into several key departments, each representing a painful cut. 51 in-store cafes are closing, nearly half the total. These are a fixture in British shopping culture, a place for a budget breakfast or a cup of tea after the weekly shop. Their demise is a massive symbolic loss. All 18 market kitchens are being scrapped. This is a 100% closure rate for the ambitious food-to-go concept. 17 Morrisons daily stores, the smaller convenience shops, are also shutting down, with most of those closures having already taken place in April of this year. Finally, 13 florist apartments and 4 pharmacies, crucial community services, are being removed from the supermarket's offering. It's clear Morrisons is not closing its main supermarket doors, but it is stripping out every service deemed a luxury or an operational drain. This is not just a business decision. It's a cultural shift away from the traditional full-service supermarket model. Let's zoom in on the most sentimental loss, the 51 cafes. These cafes have always been part of the unique Morrisons identity. They offer a low-cost meal, a meeting point, and a moment of rest for millions of shoppers, particularly older generations. But the sentimental value could not outweigh the financial reality. The cost of operating these full-service kitchens, staffing, energy, food waste, and equipment maintenance have skyrocketed in recent years. Post-pandemic, many cafes failed to see their foot traffic return to pre-2020 levels. The official statement from Morrisons confirmed the reason. Costs of operations are significantly out of line with usage, volumes, or the value that customers place on them. In plain language, they weren't making enough money to justify the expense. The supermarket is now exploring working with third parties to provide a relevant specialist offer in some of these vacated cafe spaces. This signals a move toward leased, specialized, third-party food services. It shifts the entire financial risk and operational headache off of Morrisons' balance sheet. The cafe as we know it, however, is gone from these 51 locations. Perhaps the most fascinating closure is the fate of the market kitchens. This was a relatively new, highly ambitious project. Morrisons want to compete with modern urban food halls by offering freshly prepared, high-quality meals. But this concept was a high-cost gamble. Running a full-scale restaurant within a supermarket requires specialist chefs, complex logistics, and high capital investment. The market kitchens were trying to compete with fast-casual restaurants, but with the operational complexity of a major supermarket. All 18 market kitchens are set to close. The failure here is not about a lack of good food, but a lack of scale and efficiency. When shoppers are laser-focused on value, an expensive, premium, in-store dining experience is the first thing they cut from their budget. The market kitchen was simply the wrong concept at the wrong time in the UK's cost of living crisis. To understand the scale of these 103 closures, you must understand the economic pressure Cooker Morrisons is currently operating in. The situation is a perfect storm driven by 3 major factors: debt, inflation, and competition. First, the debt. In 2021, Morrisons was acquired by the U.S. private equity firm Clayton, Dubilier and Rice, or CD&R, in a deal valued at over $10 billion. As is typical in private equity buyouts, a significant amount of debt was piled onto the company's books. Servicing that debt burden in a period of rapidly rising interest rates becomes exponentially more expensive. Cost-cutting is no longer a choice. It's a financial imperative. Second, global inflation and operational costs. The UK has faced sustained high inflation. The supermarket business operates on notoriously thin margins. When the cost of electricity, delivery, and wages all shoot up simultaneously, those thin margins evaporate entirely. The services being cut, cafes, florists, and market kitchens, are all high labor and high energy departments, making them prime targets for closure. Finally, the Aldi/Lidl effect. The most enduring competitor is the rise of the German discounters, Aldi and Lidl. Aldi recently overtook Morrisons to become the UK's fourth largest supermarket. These chains operate with a ruthlessly efficient, low-cost model. Morrisons, with its higher-cost, full-service Market Street approach, is simply too expensive to run and is losing customers who are forced to switch to discounters due to the cost of living crisis. The closure of 17 small Morrisons daily convenience stores reflects this. The man orchestrating this massive and often painful overhaul is CEO Rami Beatty, who took the helm in November of 2023. Beatty, a former Carrefour executive, is known for his focus on operational efficiency. He came to Morrisons to ensure survival. His strategy is not just about cutting costs, but about renewal and reinvigoration. In other words, getting back to the core job of a grocery store, competitive prices and fresh food. This plan involves three key strategic shifts, all financed by the savings from the 103 closures. First, investment in price competitiveness. The goal is to aggressively close the price gap with Aldi and Lidl. Closing high-cost apartments frees up capital to invest in lowering the price of core produce. Second, focusing on the core. Beatty has stated he is committed to the main supermarket and the traditional Market Street counters. However, even here, cuts are being made, with reports suggesting up to 35 meat counters and 35 fish counters may also be scaled back or closed entirely where they are not performing. Third, modernize an experience. The space left behind by the cafes and market kitchens will be reallocated to services that are more in line with modern customer habits, such as online order collection points. The reaction across the UK has been swift and deeply emotional. In communities losing their local Morrisons daily or market kitchen, the impact is devastating. Local news reports are filled with concern over job losses and the destruction of a community hub. While Morrisons has stated that staff from the affected services will be offered redeployment opportunities elsewhere in the business where possible, the scale of these closures means thousands of jobs are being fundamentally changed or eliminated. Analysts see this as a necessary, if painful, course correction. They point to the fact that Morrisons was simply too slow to adapt to the changing landscape, the boom in discounters and the shift towards online shopping. The closures are a sign of a company shedding its past in a desperate bid to be lean and competitive enough for the future. For the UK High Street, this is another significant blow. The closure of 103 Morrisons outlets and services is much more than a corporate footnote. It's a stark symbol of the overwhelming economic pressures facing legacy UK retailers. It is a necessary sacrifice to ensure the company can focus its capital on the one thing that will save it, offering value to the customer in the face of inflation. The era of the full-service, community-focused supermarket, cafe, and pharmacy is being aggressively traded for an era of operational ruthlessness. The aim is to survive, even if it means losing a piece of the brand soul. Do you think Morrisons is making the right move by closing these beloved services? Or is this short-sighted cost-cutting that will further alienate their loyal customers? Let us know your thoughts and if your local store is affected in the comments section below. Thanks for watching this deep dive into the Morrisons retail story. If you want more essential updates and insightful analysis on trending retail, business, and economic developments hitting the UK and the global market, don't forget to like, subscribe, and hit the bell icon so you never miss an update. We'll see you in the next video.